Deven Choksey is also with us. Deven, is that a challenge at all for Trent, you believe, sitting at life high levels? What would be your recommendation for people on Trent?
Yeah, good afternoon. Well, my understanding on the subject is that I think currently most of the aspects about the business are fully factored into the price. When you look at the valuations, I think it explains all. So from a valuations perspective, I think the stock is adequately covered on every aspect. However, having said that, I think important point to observe here that majority of the funds who have been holding on this stock for the want of second company available in their portfolio of a size. Probably, I think they stay limited with likes of DMart, likes of Trend in the portfolio. Maybe I think some amount of softening of the price may happen eventually, which could possibly be the entry of Reliance Retail in the market. Now, if that particular situation happens to be the reality, then in such situation, I think you might see some moderation or correction in the existing e-com companies which are currently quoting at a valuation which is fairly premium at this point of time.
Interesting. Kunal, have to get a take on the charts as well. How soon do we see 8100? Because the climb up from 6000 to 7000 surely has come in just no time at all.
Yeah, it's been very quick, very fast for Trent, and the last 3 months or so, the stock has moved from 5500, 5000 levels to now 74, 7500, 73, 70 to 7300, where it's trading right now. So the momentum has been quite fierce in the last 2-3 months. There was just one bout of correction which the stock had seen in the month of July. There was a point when the stock had corrected from 5700 to sub 5000 levels in a matter of I think 1 or 2 weeks. But post that, we've seen the stock getting back into the thick of momentum. So I think it's a classical chart where one could probably look to trail stop losses and keeping the previous week or the previous month low as a stop loss depending on the time frame could be a better strategy for traders who are holding on.
Okay, so that's a take on Trent right now. But Nifty IT index itself is also sitting on life high levels. Today it's getting support from the likes of LTI Mindtree, which is reacting to the Kotak note coming in, the upgrade, the fair value they're pegging at around 6,200 bucks a piece. You also have news flow coming in on Wipro, wherein there has been extension of one of the deals, so that stock is in focus. HCL Tech is in focus because the investor day is underway right now, so we'll be getting more details on it post market closing as well. So we are watching out for that. L&T Tech actually held its analyst meet yesterday in Bangalore. They're talking about 18 to 20% growth in the medium term. That's got the street excited. But the only IT stock which is perhaps on the back foot today is Tata Elxsi. Valuations there are also a bit of a challenge. 61 times forward earnings. Kotak says that they're very punchy. 5,500 is what they believe is actually the fair value. So let's see where it goes. But for now, that stock is under pressure. Nuresh, what's the view on IT as a pack and some of these individual names that I talked about?
So IT as a pack has been showing a lot of strength. Today, finally, Infosys, which was a laggard, has also crossed the recent swing highs. And that has some more catch up to do. The previous highs are closer to 2000. So that is one. In terms of the smaller names, we are seeing good breakouts. So something like a LTI Mindtree, which is broken out today, becomes a buy on dips going forward. And beyond the 400 mark. So that is one favorite in the large cap space. Birla Soft is also in a bounce back. So overall, the structure is positive for IT. Continue to have the same view of buying on dips.
Today we had a chat with Gautam Shah as well from Goldilocks, and he was talking about as to how he's seeing a 12 to 15% upside on the IT index, even from the current levels.
I wouldn't be surprised if the IT index appreciates by about 12 to 15% from here. I'm actually batting for a 1,000 rupee move on TCS, and if that were to happen, it will single-handedly take the IT index and the entire market up. So IT is clearly a favored area. The ratio charts are in good shape. In every bull market, at every point of time, you have to understand risk reward. I don't think this is a good time for bets in the auto space or the capital goods space based on risk reward, because any market correction and some of these names can correct quite a bit. This is the time for newer sectors, and I still feel that metals could be the dark horse candidate for the next 6 to 12 months, followed by NBFCs and banks, and clearly chemicals. So I'm actually looking at newer sectors to play the market rally.
Looking at newer sectors, and let me toss that question to Deven as well. Any new stocks or themes or sectors that you are watching out for?
Sorry, I couldn't hear the first part of the question.
My question is, Gautam was just talking about how you should not chase the momentum because in some of the sectors, the valuations has become punchy and you should look at sector churn and new sectors and new themes. So I wanted to ask you whether you too have managed to identify any fresh theme or any fresh stock ideas?
Yes, I think absolutely. Let's see, as a direction, I think we find that the commodity space will remain probably the outperformer in coming months. Largely because of the fact that on one side, the crude oil prices are remaining low and there are promises to remain low. Should there be a positive outcome on Russia-Ukraine war front, I think definitely it will augur further positive for the crude oil prices. And if the crude oil prices remain low, then in such situation, derivatives of crude oil prices, including the energy cost, and which is a raw material for metals, I would think that I think this is going to be directionally very positive. Second most important point as we progress further on hydrogen as a power, the green hydrogen as a power, we believe that the metal commodity will have an inherent advantage of consuming the power at a significantly lower cost with the green hydrogen coming into play, which is going to be a play for next 5 to 10 years, of course. But I think in the near term also, market is expected to factor that aspect into. So commodity as a space, including chemical commodity, we find that I think the probably the better times going forward. From the pipeline, I think the expensive inventory is also out, and as a result of which, I think some of these companies are looking relatively better placed on the margin front for FY25. Similar is the view that we carry for the BFSI space in particular. The banks which have the capability to acquire larger amount of current deposits, those banks are relatively better placed comparatively. And that is where some of the corporate banking names I think we feel are relatively better off. The cost of fund coming down is going to be an added advantage, and which is going to be a structural move for next 4 to 6 quarters. So metal is a commodity, banking and financial segment, including the market intermediaries into it and insurance into it. We believe that I think could be the outperformers in the coming market going forward.
I also want to pick up on the point on the Nifty IT index. While it's sure hit that all-time high and the charts are indicating further an uptake, but Kotak, like Anisha was highlighting earlier, has come out with a note on LTI Mindtree, Tata Elxsi. While for Tata Elxsi, they're retaining the sell, the fair value they are pegging at 5,500. For LTI Mindtree, of course, they're extremely bullish. They've upgraded the stock to an ad. Are you also spotting any opportunities within the IT pack at all?
Yes, I think so. We find, I think some of the companies very interestingly positioned. You mentioned Tata Elxsi. I would probably add to it Tata Technologies. These companies have some distinct advantage in form of, I think, their product offering, service offerings. They are operating in the niche play. Say, for example, Tata Technology. I think in the auto vertical as well as in the aviation vertical, within the transportation segment, they provide end-to-end solutions. So obviously, I think this particular company has a larger amount of business to talk about from both these verticals, which are likely to grow and grow systematically, because there is a systematic approach, I think, towards the multiple technology segments, I think, happening in the auto sector as a whole. That is where this company is likely to see a roadmap ahead for next 3 to 5 years with a good amount of clarity on the execution as well. Similarly, for Tata Elxsi too, I think though auto as a one vertical, with which remains I think common between the two companies, but the kind of services that deliver within the auto space vis-a-vis Tata Technology, Tata Elxsi also has relatively different kind of roadmap to follow, with other four verticals also equally interestingly positioned. So yes, I think we find that companies which are with engineering and R&D along with, and the ability to deliver the IT solutions either to the manufacturing or to the consumer as a whole, probably would have relatively better time compared to the larger peers who are likely to grow relatively slow at 10 to 15% at the best, whereas these companies could possibly grow between 20 to 25% in at least next 3 to 5 years.
If you like this video, then like, share and subscribe to ET Now.